Ujjivan Small Finance Bank had a decent core quarterly performance in the April to June quarter. In our Ideas for Profit today, I'll discuss what should be investor strategy on this stock post the Q1 earnings. Now, if you see, Ujjivan Small Finance Bank recorded a good year-on-year growth of 22% in its assets and tad dip in margin by 30 basis points to 10.2%. That was on excess liquidity supported net interest income, which offset the impact of drop in fees due to the reduced activity. Now, the profit figure was hit because of the high provision of 6 crore rupees for Cyclone Amphan in West Bengal and 129 crore rupees for COVID-19. Now, the reported asset quality picture was stable with gross and net NPA at 1% and 0.2%, similar to the previous quarter. That was thanks to the moratorium. However, the moratorium picture has some good news also to share. Now, in May, while the overall 90% of the total assets were under moratorium, that figure is now down to 47% in the month of June. Now, the collection efficiency has improved from 16% in May to 59% in July, and even though it is far from the pre-COVID level of say 93%. Now, the million-dollar question for investors is what percentage of the moratorium book would eventually turn into NPA? Now, even though management has said that none of its borrowers are migrant laborers, most customers are engaged in the essential services and many also have a second source of income as well. Now, the composition of the book with 79% of its portfolio's unsecured lending, that warrants a bit of caution going forward. Now, while the bank has had a very decent provision cover, provision against the NPAs on the declared gross NPA at about 82%, against its moratorium book of 6,805 crore rupees, it carries a provision of about 370 crore rupees. Now, given the near-term challenges of its borrowers under the moratorium, we see likely increase in the provision or even the slippages in the coming quarters. Now, in this context, it is quite important to remember that the bank had seen a sharp deterioration in the asset quality post demonetization, and investors should be prepared to face short-term spike in the bad assets as well. But is it then a stock to really put in the back burner? Well, not really, because multiple moats deserve attention for the long-term investor's perspective. Now, Ujjivan Small Finance Bank has seen a steady growth and diversification of its asset book in the past 3 years. Now, deposits is now 71% of the total resources and funds 78% of the assets. Now, the year FY20 ended with a cost-to-income ratio of 67%, which is down to 56% at the end of Q1. Now, while the latest quarter may be an aberration due to the exceptionally lower activity, the trend on the cost is southwards, which is positive for earnings going forward. So, we are definitely not ruling out significant earnings decline in FY21 because of the higher credit cost, but a sharp rebound is also expected in FY22. Now, the entity has aggressive growth plans. It wants to grow at 10 times in the next 7 years. In the months of, say, May 2020, Moneycontrol research had also recommended Ujjivan Small Finance Bank as a stock for the risk-taking investors. Although the financial performance has been steady overall, we do see near-term journey dotted with speed breakers and is not yet captured in the current valuations as well. So that's something that you need to remember. Now, the stock has already outperformed the Nifty in the past 3 months, albeit all the challenges. So the investor should pocket the gains right now, wait for correction and then re-enter in the stock.